Hey gang, welcome to Time in the Market, the investing channel with a long-term focus. Taking a look at a more speculative investment that I made recently. Nebius Group is the company we'll be talking about. This is an AI infrastructure play, cloud AI, all the buzzwords are there, so you know it's exciting. And these guys just resumed trading on the NASDAQ in October of 2024. If they resumed trading, trading must have been suspended for some reason. And it was because Nebius Group are essentially the Western assets of a company called Yandex. Yandex was basically the Google of Russia. They had a search engine, autonomous vehicle business, ML business, cloud business, all of the stuff or most of the stuff that Google does, Yandex was doing. But when Russia did the Russia thing in 2022 and all Russian businesses were so suspended from trading, so was Yandex. While that happened and during that suspension, the leadership of the former Yandex, the new Nebius Group, kind of washed their hands of Russian leadership, moved out of the country. They divested all of their Russian assets, and what you're left with are all of the non-Russian assets of the former Yandex, which includes a couple of businesses, a bunch of cash from the divestiture, and a very interesting business that is starting to grow really quickly. Their focus is going to be building out AI focused infrastructure. They're going to be, or their ambition is to be one of the largest AI infrastructure businesses in the world. They have capital, they raised a bunch of money, and they're already starting to grow, but they're still a very small business. So when you look at the stock price, the market cap, this is an $8.7 billion business with about $3 billion in cash, so maybe 5.7 enterprise value that has 80 million in revenue expected for 2024. So valuation through the roof on historical revenue, but the growth here should be very, very quick if they execute well. They have an annualized run rate of 120 million as of September 30th, 2024. That's growing almost to 200 million ARR by the end of 2024. And their expectations announced after they raised an additional 700 million through an equity financing that included Nvidia. So they are Nvidia-Backed. Isn't that amazing? Aren't most of these companies that sort of deal in AI infrastructure whose business is to buy Nvidia chips, basically Nvidia-Backed? You know, Nvidia is like, here's some money, buy our chips. What a business they've got going. Note, I also own Nvidia. Awesome business as well, so keep that in mind. So they raised 700 million in equity financing. They basically said that their goal now, because they're going to use this money and the 2 billion plus they had on the books to buy more GPUs, invest in their data centers, is to have an ARR of 750 million to $1 billion by 2025, by the year end of 2025. So what is their core business here? Well, basically, they are buying GPUs, getting all that computing power, putting it into data centers, deploying it, making it workable, working with clients to get that computing power into their hands of people who are demanding it for AI training, AI inference, all of that stuff. Right now, what's happening in the AI world, people are building all sorts of applications, all sorts of things AI based, and as soon as any sort of capacity comes online, the demand is there to gobble it up. Right now, this area is very supply constrained, which means that Nvidia can sell their chips at, pretty high prices, and thus these companies that offer GPU compute power via data centers, via the cloud, via whatever, can charge significant prices. So, they're paying quite a lot for these chips, these GPUs, but their payback period on those GPUs is, 1 year, 1.5 years, something like that. And yeah, they're not going to last forever. They're going to have to replace them in a couple of years as new technology comes online, as they get better and better and better. But the businesses are doing pretty well right now, and that's why Nebius wants to get into that business. That's why they're going to see such significant growth pretty quickly. You're going from 200 million ARR in year end 2024 to almost $1 billion by year end 2025. That's 5x growth. They have the capital to do so because this is a very capital intensive business. In 2024 their capex was close to $1 billion. In 2025 it's probably going to be north of that. Their business is essentially going to be, we're buying GPUs from Nvidia as much as we can get our hands on, we're putting them into data centers, and we are deploying them and working with whoever wants to buy our compute power. And right now they're actually charging a bit less than their competitors, but their price point will probably go up as they get bigger and bigger and bigger. So they're building this specialized AI cloud, a full stack, efficient infrastructure platform, and they're competing with Coreweave. And that's kind of where this story gets interesting, competing with Lambda, the other hyperscalers, AWS, etc. But Coreweave is sort of a path that you can look at as to what can happen to this business. Coreweave started in 2017, sort of focused on cryptocurrency at first. In 2022, they made the switch to an AI-focused company. In 2022, they had 40 million in revenue. 23, half a billion. 24, 2 billion. 25, close to 8 billion. That's kind of the growth you can get if you invest and execute really well with this company. And Coreweave, in 24, based on their 2 billion revenue, they were valued at 23 billion market cap, 33 billion enterprise value. In 25, they're likely to IPO this year. Expectations are for a 35 billion market cap, 45 billion enterprise value. So you can kind of see, well, right now, yeah, this business is, an almost 9 billion market cap and almost 6 billion enterprise value. But there's a path laid out for it if the demand supply dynamic remains the same, if valuations for these types of businesses remain the same, if Nebius can execute well, this core business could easily become this 35, 45 billion behemoth in the future. And again, the leadership of Nebius is experienced in growing a business. Yandex was a $30 billion business when it was suspended from trading. They've developed a bunch of different businesses, including this cloud business that is now converting into a specialized AI cloud. They have a Finnish data center that they're working on that they're expanding really quickly. They have the cash and access to financing to sort of make this happen, because this is not going to be cheap. This is going to cost billions and billions of dollars every single year to get the newest chips, to deploy them in data centers, to pay the engineers, to work on other things that they may want to work on. I think the long-term plan with Nebius isn't just going to be to have this infrastructure platform, but to build on top of it, build services, build a platform, build everything that you can do. And right now, most of their clients are sort of looking for infrastructure as a service, but in the future, they're going to be, hey, platform as a service as well, software as a service as well, and they have the dynamic team to be able to do that. On top of that, they have other group businesses. There's Toloka, which is sort of in the AI space, data analytics, that sort of thing. They have Triple 10, which is ed tech, online learning. Both of these, between the two of them, have about 100 million in revenue projected for 2025, 50-50 each, something around there. And then you've got AV Ride, which is basically sort of like Waymo. You can kind of see this car even looks like a Waymo car. They have these little robots that deliver food that are being used or starting to be used in the United States in certain markets with a partnership through Uber. And this car isn't something that just came up overnight. They've spent $500 million in capex already on this business. They have been, testing these cars without any major accidents in South Korea, in the United States, and they have about a third of the miles tested / driven as Waymo. And Waymo is, a $45-50 billion business. So what is AV Ride worth? I mean, obviously right now they don't really have any revenue, but at the end of the day, you sort of have this core business that could potentially be, tens of billions of dollars if they execute well, if the dynamic between supply and demand doesn't change for AI. And if you listen to TSM's earnings release, they basically say, hey, in 2026, we're not going to have the supply to produce as many chips as we need. So at least for the near term, that supply is going to be constrained. And I think Nebius is going to grow pretty well. The question becomes what happens after that. And then another business that Nebius has is a minority stake in a company called ClickHouse, which was valued at $2 billion in 2021. No recent valuations. 2021 was kind of a boom of valuations. So, I'm not putting too much value on this. But again, some of these businesses are worth something. They're growing, interesting area in the autonomous vehicle space. They're one of the bigger players there. They have a bunch of cash that they're going to invest in capital deployment via GPUs, and then they're going to access capital markets in the future, because they will need to raise money by like 2026 probably, whether that's issuing new shares, more equity financing, which would be dilutive, raising debt, or maybe even selling or spinning off some of these businesses. If they can get a couple billion for AV Ride in a spin-off valuation, that could be, $1 billion raised for them, depending on how many shares they let go of. And if you're a shareholder of Nebius, maybe you benefit from that as well. So again, this is the current revenue financial outlook. Again, 70 to 80 million in revenue for 24, ARR of 170 to 190 million. So you're looking at this and you're saying $9 billion for 80 million in revenue. That's a ridiculous valuation. Yeah, but you have to look forward to what happens in 25, what happens in 26. If they execute well, this is a $500 million revenue business with an ARR close to $1 billion by the end of 2025, probably doubling that or more in 2026 as they continue to deploy capital to invest in Nvidia GPUs and expanding their DC capacity. And if you look at kind of their business, they have 400 software and hardware engineers. These guys have a decade of experience in the cloud, in AI development and operations. They have a data center that they own in Finland that they can expand to 3 times what it is today. They are co-partnering, co-locating in Paris and a couple of data centers in the United States as well with other companies. And they have the technology know-how to do this well. You can kind of see some of their efficiency for their data centers. Nebius is right up there with Azure, with GCP in terms of power usage effectiveness. And this is only for their Finland data center, for the co-locations in Paris. And the United States is probably a bit worse because it's not all of their own technology. They have some cool tech in here. Heat recovery. They actually provide heating for a lot of the households in the town that the data center is in. So a lot of this stuff is pretty cool. Check it out. Again, these investment presentation investment decks are meant to sell the company, so kind of look at it with a questioning eye, but at the end of the day there's a lot of cool technology here, and this is sort of what their business is going to be. Right now it's AI centric. They're targeting small businesses, whales, blue whales. They don't really have that massive company yet. One of the things that drove Coreweave's increase in valuation was Microsoft came to them and said, hey, here's a $10 billion deal. Give us as much capacity as you can get as it comes online. I think in the future, 2 years from now, maybe a year from now, that's going to be, a short to medium term thing that might drive valuation bumps for a company like Nebius. If somebody comes to them, if Google comes to them and says, hey, we need some of your capacity, here's a $2 billion deal, that's going to help their backlog, help their growth, and kind of give you a good insight into their future growth path, because you sort of get it with the amount of money they're putting into capex. Sometimes if you put $1 billion into capex, that leads to $1 billion plus in revenue, because it's sort of a pretty consistent relationship between the two. You put money into capex, you get revenue, and you're sort of going to see that for at least a couple of years. But as it gets bigger and bigger, they're probably going to need some of those big whales to get working. And then their idea in the future is going to be, hey, we're not just going to be infrastructure as a service, which is kind of what Coreweave is. We might also become software as a service, product as a service, or whatever it may be. They're certainly working on those things. They certainly have some businesses that they're thinking of, and you can kind of see what differentiates Nebius from some of these other competitors. You can, whatever, I'm not going to read through this stuff. You can read it yourself, pause if you'd like and do so. But again, they might have a broader service offering, a larger development team than some of these GPU clouds. They could be more tailored than some of these bigger hyperscalers. They may provide additional resources and services for some of these smaller companies. So it's like, that's what you're looking at. And the growth pattern is sort of ahead of them. It's like right now they're sitting at 20,000 GPUs. They're going to deploy up to 60,000 by the end of the year. And then in the medium term, it's up to 240,000. You can kind of see, 200 million in ARR, up to $1 billion in ARR, probably 4 to 5 billion in ARR if the dynamics of supply and demand don't change. And again, there's always the worry that this is going to be a commodity in the future, that eventually supply is going to catch up with demand and prices for GPU hours are going to drop severely. But that's a risk you have to take with a company like this. Right now, the supply is definitely constrained. It's probably going to remain constrained for at least a couple of years. And in the meantime, Nebius has, the cash to fund expansion, to start growing revenue and hopefully improve valuation. And on top of that, you get all of those other additional businesses alongside for the ride. And I think you have to remember, to get from 60 to 240, it's going to take way more than $3 billion. It's going to take $5 billion plus to get there. How are they going to raise money? Will there be dilution? That's one risk. Commodity pricing on GPU capacity, GPU compute power, that's another risk. Execution, that's another risk. It's really easy to say, hey, these guys are going to do the same thing Coreweave did, but Coreweave, had a 3-year head start. They're sort of peaking or IPOing at the time where AI hype is at its highest. If AI hype sort of dies down 2 to 3 years from now, valuations may really shrink, and today's prices might not be such a great deal. But if you look at it from the perspective of AI hype is going to stick around for a while, and you believe that, then the valuation here could still be very interesting, despite the fact that it's very rich on a 2024 revenue, even on a 2025 revenue, it's 20x plus multiple. depending on where they end up on the revenue side, less on an ARR side. So keep that in mind. But for me, it's sort of worth the risk. Like, this is an interesting business in the AI infrastructure space. They have the historical know-how from their other business. They have the leadership that I think is pretty interesting. I think you're buying in some way into the leadership here. You know, the founder owns, you know, quite a big portion of this company. 90% of his net worth is tied in Nebius. So it seems like he believes in it. And he certainly was able to raise the index from nothing to a 30 billion plus company if it wasn't taken off and suspended from trading. So that's something to keep in mind. So you can look at this and say, yeah, EBITDA's negative. They're burning money. And yes, EBITDA is probably going to be negative well into 2025, but revenue is going to start growing, you know, at a massive clip, 25, 26, 27. Market loves that for sure. You don't know that's the case. They're going to start releasing earnings, and that's going to be key in terms of, you know, are things going as they expected them to go? Are people actually buying up all of their capacity? Yes, they're going to become adjusted EBITDA positive for the full year 2025 and 25, but CapEx is still going to be massive. Cash burn is going to be massive, and they're probably not going to be cash flow positive well until the latter part of this decade. So that's something you have to keep in mind. Raising cash, how are they going to do it? And where is this business going to go in the short term? It's going to be volatile, I think. It could certainly go up if Coreweave IPOs and their valuation is suddenly 70 billion, will Nebius benefit? Sure. But if there is a market correction, if growth stocks get hit, this stock could definitely drop by an enormous amount. Like, this is trading at 37 bucks. There's probably a bit of a floor on it right now. They have $10 in cash. They have, you know, at least a couple of dollars in some of those other businesses. Even though Nebius, the core business, isn't generating a ton of revenue, the amount of GPUs they have in their data centers, if they just sold those for cash, it's probably worth a couple bucks. So you probably have, like, you know, at least 20, 25 in business dollar value and cash on the book. So maybe a bit of a floor right now. It certainly can drop below that because the market can do whatever in the meantime. If it did, I'd buy a bunch of it. You know, if this was trading at 20 bucks, I'd definitely buy a crap load as it was. I just wasn't aware of it in the, you know, a couple of months ago when it was trading at $21 in October when it resumed trading. But I did buy some in the $28, $29 range, something like that. And I probably will continue building my position through the next couple of months and kind of waiting out to see what, you know, the first couple of earnings reports looks like, how management communicates with shareholders, all of that stuff. So as always, guys, this is not investment advice. Do your own due diligence before making any investment decisions. But this is a stock that seems interesting to me. I do want to invest in that AI boom. I think it's here to stay, but this is not a huge position for me. I understand the risks here. They're pretty significant. You know, this certainly could be a stock that's trading, you know, in the tens of billions in market cap in a couple of years. But until then, it could be very volatile. If it's in the 20s in a couple of months, wouldn't be a surprise to me. If it's in the 50s in a couple of months, wouldn't be a surprise to me either. So that's my take on Nebius. Let me know what you think in the comments down below. Do you like this company? Is it new to you? I think that's one of the things that's interesting about this company. It's not really covered that much yet. Not a lot of sell-side analysts are looking at it yet. Once they do, this could become more interesting. That could be a short-term catalyst. Another short-term catalyst could be, like I said, Coreweave IPOing. Another short-term catalyst or medium-term catalyst could be some bigger player coming to them and saying, we want all your capacity. Here's a multi-billion-dollar deal. So a lot of things that could happen. But again, you're talking in ifs, and ifs. There's a lot of ifs with this company. That's why it's speculative. It has a little bit of a sniff of some of the SPAC investment decks that you saw. It's like, hey, we're digging for rocks, and by 2029 we're going to have $3 billion in revenue. This is not anywhere close to that, but there's still, you know, a lot of hope built into this. And hope is never a strategy, but it's like, it's execution. Management has to execute, but it's like, it's a management team that has executed in the past. So that makes you feel better about that. They have to, you know, make everything work well. They have to partner with the right partners. These data centers have to function well. They have to develop, you know, platform software. It's not very easy to go from, you know, a zero revenue business, probably, or close to zero, to a multi-billion-dollar revenue business in a couple of years. Coreweave did it, so there's a pathway laid out for them, but Nebius is probably, you know, going to try to copy that, but it's not super easy. Sometimes it can be hard, so keep that in mind if you're thinking about investing in a company like this. But for me, it's worth the risk because the upside is multiples of what it is today. And I'm okay with the downside because of the leadership, because of the business model they're in, because of their balance sheet right now, because of some of the partners they have. And all of those things make it a very interesting investment. So let me know if you agree. Like, subscribe, all of that good stuff. Thanks for watching. Bye.